Good morning, everybody. Happy Thursday. It's October 19th, 2023. Great to be with all of you today. And happy anniversary to the stock market. 1987, 36 years ago today, was the big crash where the Dow Industrials dropped 26% in one day, one session. It was a huge crash. I was just getting started over at San Diego State College back then, and it was a miserable day for everybody who was involved in the stock market. But ironically enough, after that big loss, about 80% of that loss was recovered in about 2 weeks. So it just goes to show you, even when the markets crash, they always seem to bounce back stronger than ever. And we did actually witness that when the market had the great crash back in 1929. It took a lot longer than a couple weeks, of course. We had a lot of liquidity coming in. 1987, Alan Greenspan was a new Fed chairman back then, and pretty much let the genie out of the bottle of liquidity in the markets by adding more liquidity, adding more dollars into the system. So, and things haven't been the same ever since. So that's that. I played the electric slide this morning because, of course, Tesla is doing the electric slide today. It's sliding down about $14, down about 6.5% already this morning. We're seeing futures starting to firm up here. They've gotten a little bit stronger over the past 45 minutes. We were down about 6-7 handles at that time, and now we're up about 7-8 handles. NASDAQ up about 56 points. Dow up about 30. It got shellacked yesterday, as did the Russell 2000, which is up a little bit this morning as well, too. So let's take a look at things. So obviously, we see a strong move up on Netflix. NFLX is rising sharply this morning, up about $52. In the chat room a couple of days ago, we put on a what's called a strangle, which is we bought puts and we bought calls out of the money. And the calls that we have are the 400 strike. Those should do pretty well. We also have the 300 put, which is going to go to zero, but we bought that whole structure for about $2 and change. And hopefully Netflix gets above $400 here right after the open. We'll be able to take that off the board for a nice winner later on this morning. So we also did have the same sort of trade on Tesla, a strangle. I had the 270 calls and the 245 puts. I did that for about $15, and that may be opening up around about 20 or so this morning. So that'd be a nice winner as well. So if you're not in the chat room, you're not getting these things. And if you are in the chat room, congratulations for those who took these trades. So we have markets up a little bit this morning. It was a terrible day for the bulls yesterday. It was all day long, all session long, and we're just trying to get back a little bit of it today. Let's take a look at the futures market here. And you can see overnight we hit a low of about 43.20 overnight at about 3:30, 4 o'clock in the morning, and now we're at 43.50. So we recovered about 30 handles off that low. We were down 20, so 30 handles. And we see volatility starting to drop this morning. We'll see if that pattern continues to hold with lower highs and lower lows on the VIX here. You remember something, when the VIX is falling, all right, the offset is a higher highs in the higher move up in the ES futures. Okay, this is the opposite of what's going on here. So volatility is coming out. People feel like, oh, okay, well, I can take some risk here. It's risk on, and I'll go ahead and buy some calls or buy some stock, because I'm not going to get hurt if this volatility continues to slide. Now, we did have a lot of that movement yesterday as the markets were trying to rally, but they never did, right? And we came up about 10, 15 handles. It looked like volatility was going to take off to the downside, but then all of a sudden somebody bought some VIX, and it was like the switch was turned right back up again in volatility, and the markets got pounded. So I also want to show you the oscillators and the VIX futures chart here, and you can see the VIX futures chart at the beginning of October went above the long-term trend 200-day moving average, right? This is the 200-day moving average here, and we see the oscillator down here at the bottom, -5 on the NASDAQ, -15 on the New York Stock Exchange oscillator too. So what does that mean? That means that the price oscillator has also moved down. It means that the challenges are with the bulls right now. They're not in control. The bears are not also in control either, unless we have another couple more days down. Now, this is a report that I read every single night, the McClellan report, and you can see these numbers here show the 80 oscillator went to zero. Went below zero. They're negative right now, and we also have the price oscillator. Importantly, of the S&P 500 went down as well too. So, but we'll get to the unchanged level if the S&P 500 closes above 4317 today. It closed below it yesterday, so we're slightly above, slightly below that zero line. For the oscillator, so the price oscillator, but we can see the other ones close down as well too. So this is important to pay attention to. So I'd also show you something that we talk about a lot here on the Daily Bites is the and it concerns us when it's really super negative, which is the New York or the New York Stock Exchange or the NASDAQ high-low list, right? Take a look at this. This is a disaster here. This is showing us what we may have in store for the price action of the S&P 500, the Dow, the NASDAQ going forward, right? This is not good. This is terrible breath. Even though the daily breath over the past couple of weeks has been fairly good, moderately good, not good on Monday, not great on Tuesday or Wednesday. Look at the new lows that have been printed over the past month or so. A lot of new lows, right? So if the market is not making new highs, if stocks are not making new highs as the markets are trying to rise, that's a huge divergence. So in other words, if new lows are expanding and new highs are going down and the market's going up, that's a huge divergence that it's eventually going to get rectified by the markets getting whacked. It happened in 2018. Believe me. I was there. I saw it with these new highs were continually going lower. New lows were going up. The stock market was going up. This was in October of 2018, and it was 2 months later that the S&P 500 and the NASDAQ dropped 10 to 12% in about 3.5 months. It was just after the Santa Claus rally started, which was just the day after Christmas, where we saw a huge amount of buying coming in. Into the end of the year and into the start of January, and then Chairman Powell pivoted right after 2 days after Apple had a huge warning for their quarter. So I remember that in 2019. So what is the message here? Pay attention to what's happening with the breath, right? Look at this every single day, as I do, and see it for what it's worth. Okay, this is atrocious. This is not good. This is bearish. This is not bullish, and it tells you, simply put, that markets are teetering right now. We can also see the same thing happening with interest rates, right? Let's take a look at the 10-year and the 30-year right now. You can see here that the 30-year tested 5% this overnight, right? Actually, it's at 5% right now, 5.02. That's going to put a lid under the markets. The 10-year is 4.94, almost 5%. If this thing gets to 5%, look out below. Have some puts on, keep some puts handy, okay? It doesn't matter what the markets are doing. Pay attention to what the bond market is doing, because it seems to be driving the action for the rest of the markets, okay? For commodities, for the stock market, for small caps, large caps, it doesn't matter what it is. Pay attention. Follow what's going on with yields and with the bond market. The higher yields go, the less attractive stocks become for investors. Okay, we see a nice pop here in First Solar, which is up about $3 and change here. Again, Netflix up sharply, Tesla down sharply. Chinese stocks down a bit as well today, and some stocks like Meta and Microsoft trying to recover from yesterday's drop. So, let's see, we have earnings coming out later on tonight from Intuitive Surgical. We have CSX, Consolidated Rail. This morning we did have earnings from Union Pacific, and they were revenue fell. The stock's up sharply here because the stock has fallen quite precipitously. AT&T came out with good earnings. Later on today, we'll have WD-40. Tomorrow, American Express, Schlumberger, SLB, Huntington Bank shares, also Berkshire Bank, and a couple of other small regional banks as well. So that's going to be it. I'm going to tell you once again, exercise some caution right now. If you can raise some cash, do that. If you have some protection on, absolutely do that. Lighten your positions up a little bit. Just wait. Right now, we're in kind of a, I don't know, sausage making period for the markets. And it's, if you ever been into a meat factory, you know how ugly it is. The whole process of making sausage is. But you know, when you cook that sausage on the grill and then you slice it up and so forth, it tastes great. But during the whole process of making that sausage, it's ugly. Right now, we're in that sausage making process. We don't know really which direction the market is going to be headed to. We're in a bit of a range here between 4220 on the low side, 4400 on the upside. So it's about a 180 point range. If we break the 4300 level precipitously on the S&P 500, we're going to come back down and test those lower levels again. And where are those lower levels at? They're right at the 200-day moving average, which is 4230 right here, right? So we're between here and here right now. So if we landed yesterday right on the close at the 20-day moving average. You can see that dotted line right there, and that came in at 4314. We closed right at 4314, like a magic, like a magic magnet, right? So prices are attracted to it. So is this a back test or a check back to this 20-day moving average to see how the markets will respond? It could be, but you need to see some momentum. You need to see higher lows and higher highs, so which means you've got to get above yesterday's high, which comes in at 43.94, roughly 43.93. Another 80 handles up to have the markets prove itself that this was a check back into the uptrend. Actually, ideally, you'd want to get above Tuesday's high, which would be about close to 4,400 as well too. So if we can't get above there, if we make a lower high, lower low today, these levels down here are going to be tested, another 80 handles down. So keep an eye on that. All right, that's going to be it, everyone. Have a great day. Have a great weekend. I will see you guys all back on Monday, of course, for another edition of the Daily Bites. And thank you again for listening. Don't forget, today I have a webinar, free webinar coming out later on today. It's on how to be successful as a trader. So I'm going to give you guys some tips on how to trade, not just options, but stocks and so forth, and anything under the sun that you want to trade. So how to be a successful trader. So I'm going to be offering that. Again, it's free after the close today at 4:30 p.m. roughly today, Eastern time. And I look forward to seeing all of you there. It'll be recorded, of course. So if you just sign up, go to the website, explosiveoptions.net. Let me show you where that is. I'm showing right now. You can go to the website. I put it out on Twitter and on Facebook and on LinkedIn and so forth. But if you go to the Explosive Options website, hover over Trading Insights, you'll see webinars. Click on webinars, and you scroll down, and you can see where you can register and sign up for the webinar. So it's very easy to do. Today, 4:30 after the close, we'll be discussing the trading tools you need for success. All right. Have a great weekend, everyone, and I will see you guys all back on Monday. Enjoy yourself, and I'll see you then. Bye. Oh, quick shout out to Craig. Happy birthday to you. He's in Las Vegas right now. Have a great day, Craig. We miss you in the room. Hopefully, you get back in the room, get back home safe after your trip. Enjoy yourself, and we'll see you back in the room on Monday.